All right, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for March 29th, Monday, 2021. Today, we're going to go over a little bit more what we learned from Baidu. And more importantly, we're going to learn about the cycles of stocks and how certain stocks move. I'm going to go ahead, I'm going to run over to FinViz. And I'm going to go with Baidu just because I like their charts. This has been the cycle of Baidu. Sideways for a while, finally got its pop, literally from 150 up to 350 and back down to 200 right now. It looks like 200 is going to be a support level. Now, I found it interesting because a lot of people weren't too worried as Baidu is moving up. And then, of course, we had to move down. And the biggest concern was, well, they're doing a dual listing. Kevin, they're listing in China as well. And we felt that that was going to be damaging in some way, shape, or form. If we go to Investopedia, we just do a little search on dual listing. It's nothing more than dual listing refers to a company of any security on two or more different exchanges. Company uses dual listing because of its benefits such as additional liquidity, increased access to capital, and the ability for its shares to trade for longer periods if the exchange in which the shares are listed are in different time zones outweigh the cost of the second listing. Some exchanges have a number of listing categories for companies that seek dual listing, each with different requirements and benefits. So the thought was that this was going to be a bad thing for some reason. Now, the question is if it delists itself from the US. And it's just not apparent that that would be a big worry for any reason. So, last week, Baidu created a dual listing on the US and the Hong Kong exchange to help their price of the stock go up, trading during different time frames and more liquidity to put into the stock. Worries were obviously delisting US. China has more overreach to, and I'm going to put this in parentheses, make the companies use GAAP accounting principles. And of course, don't forget, Baidu owns what? Tencent, 30% of Tencent, Alibaba, Sohu, and IQ. They've got a big reach out there. So our concern was, is this it? Is this it? Is it getting delisted? Hurley Investments basically said that we didn't see any delisting or any regulations coming down the pipe for Baidu. There was nothing there. There was nothing that we could see that pointed out that we were going to have a problem whatsoever. We didn't know. In all honesty, we had no idea. Archegos levered itself, and it was a $10 billion small hedge fund that was probably borrowing 10 to 1 and maybe had as much as, I think I worked the calculations out, probably wouldn't have more than 5%, but leveraged on up. They might have had somewhere between $5 to $10 billion leveraged in Baidu. And if they leveraged it or bought in at that, I don't know, $170 price, I'm trying to do my math, and I'm not doing a great job of it here. We're talking about 29 million shares. We didn't know. We didn't know that this is what was going on. But it was a $10 billion hedge fund that looks like it was leveraged 4-to-1. And if 5 billion of that was in Baidu, we're talking about 29 million shares. I've actually heard figures it might have been leveraged in Baidu as much as 40 to 65 million shares. So the question is, well, why is this a bad thing? Well, it's leveraged and it's shorting against it. Then you run into a problem where Baidu has a huge short float. We're talking huge. I mean, this is ridiculously huge. Can anyone remember what the percentage or number is for a short float that tells you this thing should have a big pop in it? Anyone remember? More than 1%. Exactly. If you see a short float over 1%, your expectation is you have a huge pop to the upside. 6.3, it would not surprise me to see Baidu make a run up another $100. That could be and would be an expectation when you have a short float sitting at 6.3%. I found it interesting. Loop Capital. Hold to buy. Well, who the hell is Loop Capital, right? China Renaissance. Hold to buy. Mizuho. It's a buy. None of those three matter. Oppenheimer's kind of important. Citigroup, UBS, Barclays, Morgan Stanley, Deutsche Bank. Yeah, those ones matter. The last three, garbage. They're those little funds that cause this problem in the first place. So I have two articles here about what's happening. And I thought it was quite interesting because when it comes to Baidu, here you go. $3 billion stock offering. Mass was selling, fund was long. Viacom apparently had a bunch of long positions in internet shares. I mean, my thought is, hey, you guys should be doing good. If you're selling things for a profit or if you're over leveraged, you're in great shape. We talked about it 6 weeks ago. Time to take a little off the table. Time to lock in some profits. Time to add those long puts in to put those long puts in to protect what you've made. We pointed out Hurley Investments was over leveraged in Baidu. It ran up so far so fast, it was a huge portion of the portfolio. Pretty interesting that a small guy like me could see that. I've got two amazing articles in here that you've got to read. The second one goes more into understanding of what happened and why it moved everything with the margin calls that were anticipated, the positions that they were in. Totaling around 10 billion, but held positions worth in excess of 50 billion. That's not all in Baidu, but definitely read through it. You'll understand what happened and why. I also found another little something I thought was pretty interesting. A Morgan Stanley billion-dollar investor gets canned. David S. Weinerman, $1 billion investment portfolio, $4 million annual revenue. Got the boot. Had no customer complaints and no regulatory disclosures, which I found interesting because that would typically be the big tell. He had overstepped his bounds. He did something wrong in that regard. Yeah, that would be the rough one, right? I love it to see that maybe he's done something that's not being said, that the company said, hey, we're going to sever ties with you up front. I see, hey, there's $1 billion that needs to go somewhere. Hurley Investments would be a great place for it. Okay, so what did we do? Because some of you got some phone calls from me last week. So on Baidu, first thing we did is we filled our long puts. Basically, we have 77 contracts, so that's 7,700 times the price of 104. We booked $800,000 off of Baidu. And what we ended up doing is rolling these puts down. So that's $800,000 of profits, and we still have puts in place. $104 was the profit, and we still have puts in place. Now, for some small accounts, we did not buy more shares of stock. We are going to be adding to the 350, 450 spread so that we can take advantage of a run up higher. I want to spend a lot less money on some smaller accounts so that you guys aren't over leveraged in Baidu. Usually accounts that have 500 and less, you did not see another 100 shares or 200 shares added in. We just booked the profit, and I'm waiting to create spreads for you for a significantly cheaper price. You may go back into 250, 450 spreads if you don't have any. But $800,000 was booked. Now, with some of the larger accounts that had a higher risk tolerance, we did have some positions that were bought. 3,200 shares. So out of that $800,000, 3,200 times 199.50. We did use up 638,000 of the $800,800 that was booked. So yes, we did add some more shares. And last but not least, I did have one more picture here that I wanted to stick in so you could see. There were a couple people where we just booked them outright, 800 shares outright, that were just waiting to go back into 250, 450 spreads or 350, 450 spreads. That basically called and said, hey, we've had enough. The key to understand is this. The reason why we collar trade is because all of this that you can protect and then what you can make up on the way down gives you an exponential bounce as it goes higher. Well, some of the smaller accounts are like, well, Kevin, you didn't add shares, which is correct. I have not. But for dirt cheap, I can add some $100 to $200 wide spreads and give you the ability between now and January of 2023 to still participate in the run up. Well, Kevin, you kind of missed, if you take a peek, you kind of missed. See where it closed today. Closed at 204.70. 204.70. So I might be a couple dollars off from where other people came in. But in a spread, a leap would be a good idea. A leap spread to give you downside protection in case there's more that we don't know, and to still give you a huge opportunity for a run higher. So that's what we ended up doing. We were working on making sure we did a great job of taking that profit. We got to dollar cost average with the profits and keep long puts in place. And some sold out, but looking for leap bull call spreads to continue the run higher. It has been difficult. If anyone thinks trading is easy, we probably have a spot ready for you. We probably have a spot ready for you, and you're going to see some, we'll get you on board. But your results have to speak for themselves, right? What a ride on Baidu. And understand with the short float and the fact that none of this is the company's fault. The company is still producing the profits, has its long reach tentacles in different areas, has a huge amount of opportunity to move higher. All of that is still in play. And here we are just waiting for the chance for it to go higher. We easily, with a 6.3% short float, we easily have a $100 run to the high side in Baidu. Kevin, explain to me how you calculate that. Well, we just saw a 60 million and like 120 million share sell day, right? We've got 267 short shares that are floating. If we want to see that, if we divide that by 6, so here's how I'm getting my numbers that justify what I'm coming up with. 1% is high, right? We've got 6.3. If we divide this into 12 or 13 parts, roughly about 0.5%, we usually see between 0.5 to maybe 0.6% as a share float. If we go down, divide this into 0.5% pieces, and literally take 267 million shares, divide it by 12, the short float should be somewhere between 22 to maybe 35 million shares. That means there's 232 million shares that have to cover their short float. On a stock that average volume is between 10 to 12 million dollars on a 10-day average, we have 22 business days worth of volume that has to cover short positions by buying the stock, which should significantly move the share price higher. It's probably a couple weeks out. You heard me say a week or two ago, which is probably not next week. It's probably the week after. You'll see things move back together and really move higher. Kevin, holy crap. They're insider owned 15.6%. Yes. the Chinese government is very heavily invested in Baidu. A lot of people look at me and say, Kevin, are you a communist? Oh, you're so profitable. You're so happy about Baidu. Well, no, but read the tea leaves. If you are running the second largest economy in the world and you can cheat the system, you want to see a no-brainer for a stock to be in? It's Baidu. Baidu is a ridiculously slanted stock to go higher from here on out. 22 days of average volume has to be covered to put the stock into an average or normal standing. There's a lot of pent-up demand for Baidu. It was last year's winner. It might make us this year's winner as well. Oh, where am I going? I'm going with where are markets going up this week? I'm probably going to say flat. I'm going to say flat because there was enough selling last week. And with Good Friday and the markets closed this Friday, I'm not sure that we have a lot of upside opportunity. Big money will probably exit by tomorrow. There'll be no more big money in the stock market. Small money, dumb money, retail shares, whatever you want to call us, they've had enough to scare them so that they're not going to be pulling the trigger on anything. I kind of wish they would do like a half day on Thursday, right? I'm not sure we're going to see a pretty illiquid market on Thursday. That will tell us if our markets are going to be up or down for the week, but I'm going to tell you flat. Dow Jones is bullish, couple good runs. S&P is bullish, couple good runs, sitting right in the middle of the median line and the overbought at 70. The NASDAQ, trying to get to be bullish. Probably not going to happen this week, probably not going to happen next week either. Something else I forgot to show you. Let me show you one more thing about Baidu. When I look at Baidu, green bar, it actually went all the way down to 174. Tried to come down and test its 200-day simple moving average. Well, Kevin, if you think it's going to go higher, it has its huge float, why didn't you just let it run? Well, because that's not prudent. That's gambling. It could have been a dead count bounce on Friday. It could need to test the 200-day simple moving average at 172.52. It did not stay oversold on the median statistics, the Williams percent R, long enough to see that big run or that big buy into it. Kevin, are you serious? $100 on the way up. You've got to look at your charts and find relative points. Am I serious? Do I mean it? Look at my relative points. 230. We're somewhere in here at 320, 326, possibly 354. Am I an idiot for calling 100 points up? Well, not if you relate past movements, especially if we're going relatively from here to where it has been to how high it's been in the past. You know what's hilarious to me? All these professionals that crap their drawers right here and crap their drawers right here. And most likely when you have something that loses half its value, they've gotten out. I'm going to find something better. I'm going to churn you into a different fund. I got to churn you out of that Baidu. I told you it was so expensive. You need to diversify the mutual fund that's front loaded. I love seeing professional traders get their ass handed to them because the system doesn't work. You can't give people average returns because the market doesn't work that way. You can't print someone up a financial plan and give them a number because real life doesn't work that way. You can't base your returns off of averages in a variable return market. And man, I have got to create a video that says, don't buy the BS. Anyone can do the numbers and find out it doesn't work. All right, I'm off my soapbox. Let's keep moving on. So, nice to see our index is positive. And let's keep moving forward. We're in March in 2021. I'm saying 0. I'll start next week with April. I'm just going back to where we're at. 39.14. We're at 39.71. I think we're going to be pretty flat. Got to give me props. That's a heck of a call. But thank goodness we had protection because we have moved in a flat March. My gosh, we've moved 260 points in a flat March. Almost what? 7% almost. Up and down, highs and lows. Pretty scary month for being flat. Not much by earnings. Merck, BlackBerry, Lululemon, PVH, Walgreens, Boot Alliance, Guess, and Micron on Wednesday. Thursday's CarMax. For those four of us that are in Micron, I'm just running a covered call that's over 12.5% in the money. That'll be your protection. We have consumer confidence tomorrow. ADP employment will be the big one on Wednesday with pending home sales. And obviously initial continuing claims, ISM manufacturing, but really Thursday is a dead day. It'll be dead money. I'm still running with, how am I looking to trade? Some protection, even though it might be making some mistakes. Again, I just showed you 7% movement from highs and lows in March. They'll turn out to be a flat market. We will book on our protection that we had over $1.1 million in total accounts across the board. Not bad for trying to protect, even though I'm probably making some mistakes in some areas or with some stocks. It was just too volatile not to be protected. All right. Again, I like the firing of an advisor, billion-dollar advisor. 2 articles on Baidu. Please spend your time reading through it. The last one is most important. We got the Bobs going back out. The Babs, right? It's not the Bobs, it's the Babs. Build America bonds. That's somehow how we're going to finance nearly $6 trillion in spending, apparently. I would love to see that instead of higher taxes. It'll be interesting to see 7% muni bonds again. But we've already been through this once, right? We already saw the collapse in munis and states giving IOUs. With all due respect, this is not for the faint of heart. I would not suggest that you jump on board the Babs bonds to build American again, especially not on a state, county, or city level. You gotta learn. You gotta learn and not get burned by it. But watch these get pushed by licensed individuals such as myself. They will probably pay out that full 7% as well to someone like me. The talk of the town is going to be, hey, we're going to build America. We're going to make it great again, even though that is not the Democratic slogan or Biden slogan. But you got to get into these bonds, 7%, 10 years. It's really good. you should put $100,000 in it so I can book well, I'm probably going to book 7% in a commission, and I'll take 1 to 1.25% every year you stay in them. Hell of a return for me, right? And I get paid up front because they're front loaded. Be careful of bonds. These also will trash the bond market in general. No one's going to want to be in our treasury bonds. No one's going to want to be in corporate bonds because you're going to have a guaranteed 7% somewhere along the lines of protected or federal government backed bonds, which is scary. This was brought to me by a client. Take a look at inflation. Definitely read this article. I love the article even more so. I love the charts. If you want to understand inflation and if we are going to get it or not, this is the article that I think you need to pay attention to. Really a smart understanding of talking about inflation and what we're going to be up against sometime in the future. With that said, that's what I have for you tonight. Are there any questions that I can answer for you in regards to your portfolios, to what we're doing, to the economy? Let me know if there's a question there that I can answer for you. William, is now time to look at maybe some overseas ETFs? That is a very interesting question. It's funny it would come for you because you are overseas. It'd be you or Abraham that would probably bring something to me like that. I still think the US is the best house on a pretty crappy block. So I don't see the emerging market growth after COVID. I don't see Europe in your area, for that matter of fact, with COVID getting better. In fact, if anything, I think Europe's getting worse. Their numbers are getting back higher. They're going to pass it around. Watch Europe get shut down again. It's really interesting to think, where can I find the grass that's greener on the other side of the hill? And I'm not sure that I can calculate or find something that's available right now that you could do that with. So just something to think about. Someone brought the question up about tips. So let me run out to the Treasury inflation protection, but tips. And you will find that in the tips or the tip spread. Treasury inflation protected securities, right? It's supposed to be a way to play inflation and to make money between the US Treasury bonds and Treasury inflation protected securities. It's to make the difference of the spread is what you're trying to do. And as that spread grows, you get to make money off of it. I haven't played tips in forever. And in all honesty, the tips were best used in the 80s when we had roaring inflation. I'm not one to talk about the tips or the use of them right now, but I would not be going into, that's not fair to say. A Treasury inflation protected security would probably be a good purchase in the future, but I think where Fed government will keep interest rates low for an extended period of time. So there is an opportunity there. It'll come to timing. And I'm not sure I would feel comfortable trying to time the use of the spread between the yield and between the different yields and treasuries. I just I feel I'm not smart enough to calculate that appropriately to suggest when and how to use them. So that is something that I would tell you. Abraham, Even with all the problems, you point out the U.S. market is far more transparent than any other, something essential for small investors. Very excellent point, Abraham. So let me say that one more time. Abraham made the comment, even with all the problems that the U.S. have, and this is coming from a Brazilian brother here, the U.S. is far more transparent than any other, something essential for small investors to make their best educated decisions with. There are a lot of other markets that are not nearly as transparent as the U.S., that don't run such a tight ship, even though we probably feel here that it's not as tight as we would like it. I just think it's the best house on kind of an ugly street right now is what I would be telling you guys or having you look out for. Ida, did that answer your question on the tips? To the best of my ability. And are there any other questions you guys have? Good questions coming up here today. Kevin, when are you going to invest in your list of 7 to 9 new stocks to enter into a portfolio? I would probably be looking to get into some of those coming around earnings. In fact, I want to stay in cash for the next 3 weeks. I want to get to the start of earnings season. I then want to get into some of my favorites. In fact, let me show you why. Great question. I'm glad you brought that up. Article came out during the month. Hedge funds 25 top blue stick stocks to buy now. And this was the beginning of March. You should have a better opportunity to do it now than you would have had at the beginning of March. And let's just go through and take a look at these 25, because I think you're going to be pleasantly surprised. Adobe is one. Way overpriced, way up high. I don't see Adobe. It is not one that I would go into. Walmart. Aha, here's the one that we're looking to get into. At $135, I think it has some good profit potential when people want to get back out and spend money. So we're 1 for 2 right now. Intel's dead money. They should have done better research on this article. Not one to be in. Pfizer I can see, but we're not going to go into that. Too hard for me to do pharmaceutical companies. Nvidia, overpriced, way overpriced, not going to go into that one. You missed the boat on that one. But we're 1 for 5. Verizon, we're starting to dabble in Verizon. It's a good stock to go into. Has some pretty good buying opportunity here. If it can break out above that $57.50 range, $100 is the next stop on the way up. Bank of America, we're now 3 out of 7. I love it. Bank of America, good opportunity. We're already in it. Alibaba, well, we're in Baidu that owns 30%. So now I'm going to say we're in kind of 4 out of 8. I'm just being sneaky at how we're getting into Alibaba. Aviv, I wouldn't do this one. Again, same thing. Drug company, pharmaceutical, not my cup of tea. United Health Group, I can see it. Cardinal whatever health group might be another one. I can see they're going with this, but I'm looking for better returns. Procter & Gamble, people, if we go into a recession, our market crashes. Consumer staples, I can see this one, but we're not going to go into that one. A good opportunity. Home Depot, yeah, I don't have a good answer for you, but I find it interesting. Merck, again, good, but I'm not going into the pharmaceutical in that regard. PayPal's already at its highs. It's overpriced, but I understand it. MasterCard, I do like MasterCard, but I'm going to go into Visa instead. Visa's better. All right, top 10, Johnson & Johnson. We had 4 out of that 15. Not doing Johnson & Johnson. Berkshire Hathaway, we're not going to do Berkshire Hathaway. We can think for ourselves. JP Morgan, we're in number 8 already in Leap Spreads. We're there. There's 5 out of 13. Disney, number 7. We're now 6 out of 19 that we're in, right? I love it. Visa, 7 out of 20 are the best ones to be. and we have 3 now in the top 10. I like where our portfolios are positioned. Google's too expensive. We're overpriced to be in Google. Apple, we're now 9 out of 22. Over 30% of our portfolio falls in line with these managed hedge funds. 4 of our core holdings are in the top 10 with Apple. The next 3, we're not going to be in. Facebook, we've dabbled in the past, but we're out of it. Already at a high. Amazon's too expensive to do what we want to do. And Microsoft, I disagree. But I like where we're at compared to where big money's at. Rich Warman asked about CVS. CVS, Walgreens, Boot Alliance are the 2 that you might look at. The big pop or big move for them is that they would be administering a bunch of these shots and be raking in money hand over fist because they'd be paid by the government to do so. We haven't seen that movement. We haven't seen that money, nor have we seen the American public rushing out to get vaccinated like we would have thought. I do like CVS, but understand a lot of the premise for what it was going to have its big pop on is not there anymore. Did not pan out. So do keep that in mind. All right, guys. Hey, I appreciate you being with me. I hope this is helpful for you to understand what we're thinking, how we want to attack our portfolios, how we want to run our core holdings. If you do have any questions, don't hesitate to reach out to us. We can be found at info@hurleyinvestments.com or customer service at hurleyinvestments.com. I appreciate you guys being with us. Have a good evening. As a heads up, there's a 50-50 chance tomorrow night gets canceled on our trade findings and adjustments. In fact, I'm just going to tell you right now, 99% chance trade findings adjustments gets canceled on Tuesday. And the Thursday morning one is just going to be a question and answer session. No one should be putting a trade on Thursday with the uncertainty in a 3-day weekend. No money's in. It's just not smart. So maybe look to see a couple cancellations coming across in the near future for trade findings and adjustments. Guys, appreciate your time tonight. Have a wonderful evening. I do hope this was helpful. I look forward to seeing you again next Monday evening. Good night.